Hello traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. In this particular video, we are going to be discussing scalping. Okay, now scalping is one of the most exciting and fast-paced trading styles out there. And in this video, I'm going to show you how to learn scalping in just 10 minutes. Okay, so if you have wondered how to enter and exit trades quickly before while staying disciplined, then this video is for you. Okay, make sure to hit that like button and subscribe to the channel before we dive in. All right, let's get started. So first, let us define scalping. Scalping is a trading style where you aim to take small, quick gains from minor price movements. Now, unlike swing trading, right, or position trading, scalping focuses on short-term charts, right? Usually 1-minute charts, 5-minute charts, or 15-minute charts, okay? Maximum is usually 15 minutes charts, all right? Because as a scalper, you don't exactly have, the need to start going to higher time frames that exceeds the 15-minute time frame, okay? So scalping works because it capitalizes on small price changes that happen within a short period. So it is ideal for traders who enjoy fast decision making and staying active in the market. Now, let us just talk about the key principles of scalping that every trader needs to know. The first is the time frame. Okay, it is actually very important to stick to lower time frames like 1 minute, 5 minutes, or 15-minute charts. Okay, because scalping is all about capturing quick movements. For example, now this is the 15-minute chart, right? So as a scalper, basically, when you notice an increase in momentum, right? So scalpers sometimes, depends on strategy because you might have, different strategies that are under scalping, but sometimes you might tend to chase momentum, right? When you notice an increase in momentum in one direction, especially if it's in the direction of the trend, you can just quickly open a trade in the direction of that trend, in the direction of that momentum. All right, you pay attention to support and resistance zones on your chart. You identify potential breakout zones. Make use of your trend lines. Make use of your support and resistance zones. Pay attention to patterns, right? Chart patterns, candlestick patterns, anything at all that can give you a hint as to future price activity. All right. So as a scalper, you are looking towards catching price movements quickly. Okay. And on the smaller time frames, you'll be able to do that more effectively. And it is important to focus on liquidity when you are scalping. Scalping works best in high liquid markets like Forex majors, such as the Euro USD or the GBP USD. As you can see, this is the Euro USD chart, okay, or popular indices. All right, you can actually use popular indices as well. So liquidity ensures tight spreads and fast execution. All right, finally, discipline is key. Since scalping involves multiple trades, it is crucial to stay disciplined and avoid overtrading. All right, overtrading is really, really bad. Okay, now let us just walk through the steps to execute a scalping trade. All right, the first is to identify key levels. So you have to make use of support and resistance levels to determine where price might reverse or pause. So when you go to your chart, all right, when you go to your chart, you should identify the important levels on that chart. All right, identify the key levels, identify support and resistance levels, most especially the ones that are close to current price activity. You don't need to start going all the way back, into historical prices. You can just focus on the ones that are close to, current price activity. And then you identify key areas of reversals, all right? Areas where you had rejections, okay? Rejections on the upside, rejections to the downside from up, where you have resistance, and rejections to the upside from down, where you have support. So identify all your key levels on your chart. Then after that, choose the right indicators. Okay, for scalping, simple indicators like moving averages, Bollinger Bands, and RSI can help you spot momentum shifts. So for the moving averages, you can actually decide to use period 20. For example, you can decide to use period 20. All right, you can decide to use period 20 for identifying opportunities. You can see that when we have the price bouncing off the support and crossing above the moving average, it was a good buy signal. And you can see how the price went all the way up to this point. It got to this resistance, and then you can see it got rejected again, right? You can see this trend line. It respected this trend line. It dropped below the moving average, and it got to this support level, all right? And then on and on. Now, another indicator that you can use is the Bollinger Bands, okay? The Bollinger Band is another indicator that you can use, all right? So basically, you want to pay attention to the price movement from the lower bands to the upper bands and back to the lower bands and back to the upper bands, all of that. So you can literally be scalping within the Bollinger Bands, you know, scalping as the price navigates within the Bollinger Bands, all right? And then you can also make use of your RSI. Actually, you can decide to use all these indicators all at once if you want to get confirmations, okay? So for the RSI, you're going to be paying attention to the RSI moving from the oversold to the overbought, back to the oversold, and back to the overbought, all right? So that's going to be showing you change in momentum, all right? Momentum shifts, basically, all right? So for example, let's say you know, you got a buy signal from the moving average, and then you notice that price was also piercing through the upper Bollinger Band, and at the same time RSI was pointing upwards. That's a buy signal. Okay, so basically you can actually decide to combine all these indicators and also make use of your support resistance levels and your trend lines, you know, to enhance your confirmation, to build your confidence in the trades. But it doesn't mean that you must use all these indicators. You can actually select just one or two, or even stick with price action. Okay, it depends on what you prefer. All right, and then as for your entry and exit timing, look for precise entries when price reacts at key levels or when indicators confirm momentum. Okay, so keep your exits tight. Scalping is not about holding positions for long. Okay, scalping, that is the reason why it's called scalping. You don't hold it for long. So you need to have tight stop losses. Okay, ensure that you have tight stop losses. Okay, scalping requires small predefined stop loss levels to manage risk effectively. Okay, for example, if you are trading on a 15-minute chart, you might place a stop just below a recent swing low. For example, if you had entered a buy around here, you would have considered setting your stop loss just below this swing low. You might have entered here, but your stop loss will be set just below the swing low. All right, you have to have a tight stop loss. This is literally scalping. Okay, this is literally scalping. So you need to have a tight stop loss. All right. So having done that, right, you can then aim for a quick 1-to-1 risk to reward ratio, right, or 1-to-2. Okay, but for scalping, 1-to-1 is actually acceptable, right, because you are literally trying to catch small moves. So 1-to-1 is actually acceptable, or you can just be trailing your stop loss. Okay, in case of if the trend continues to go in your direction, you can just, you know, be trailing your stop loss, bringing it up as price goes in your direction. Okay, now here are a few tips to make your scalping strategy more effective. Keep your charts clean. Okay, so avoid overloading your charts with too many indicators. Okay, you can see I just mentioned only a few indicators: the moving average, the Bollinger Bands, and the RSI. So you don't need to add like 10, 25 indicators on your chart. They're not necessary. All right. Trade during high volume sessions. Okay, scalping is all about speed, so simplicity is your friend. And then you have to also focus on times when the market is most active. All right, like the London or New York sessions, to ensure quick order execution. And then stay focused. Okay, scalping requires full attention. Avoid distractions and stick to your plan. And that is it. You now have the basics to learn scalping in 10 minutes. By focusing on the right time frames, key levels, and disciplined execution, you'll be ready to tackle this fast-paced trading style. If you found this video helpful, make sure to hit the like button and subscribe to the channel. Don't forget to turn on the notification bell so you never miss out on new trading tips and strategies. Also, let me know in the comments what's your favorite indicator for scalping. I'd love to hear your thoughts and maybe even feature them in a future video. Thank you for watching, and as always, happy trading.